So today we're digging into Equinox Gold, a company that analysts are saying is at this huge turning point. We're talking about a story of a company that's basically transforming itself from a risky, hard hat-wearing builder into a serious, cash-gushing producer. And the crazy part, it's all happening right now. You know, for the last couple of years, if you looked at Equinox Gold, the story was all about risk. I mean, they were basically a construction company, just pouring massive amounts of money, capex, into the ground and taking on a ton of debt to do it. But that story, it has completely flipped. Analysts are now calling this the harvest phase. Think about that. It means a whole new chapter of free cash flow, a cleaned up balance sheet, really just a much simpler, cleaner story for investors.
So you gotta ask, how did this even happen? Well, for the longest time, like we said, Equinox was just a builder. Everything was about someday, right? All the focus was on this future potential. But here's the key, all that heavy lifting, all that construction, it's finally in the rearview mirror. And now the company is stepping into a brand new role, a major gold producer.
And this really brings us to a super important idea, a key concept here, the inflection point. It's really the heart of this entire analysis. Think of it as that one specific moment where everything just changes for a company. The old risks start to fade away, and the market finally begins to see the company for what it's becoming, not for what it used to be. And the big takeaway from the analysis is that Equinox is right there, at that exact point today.
Okay, so what was the trigger? What was the big catalyst that kicked off this whole inflection point? Well, it all boils down to one single, really bold strategic move. A move that analysts are basically calling a masterstroke. And that was the pivot to North America.
And here's the number that changed absolutely everything. A little over $1 billion. That's what Equinox got for selling off its entire suite of Brazilian assets late last year. Now you have to understand, this wasn't just selling a few things off. No, this was a complete and total re-engineering of the entire company's future.
And the logic behind this move was actually pretty simple and kind of brilliant. It was a three-step play. Step 1, sell those Brazilian assets for over $1 billion. Step 2, take that cash and just destroy over $800 million in debt. I mean, just wipe it out, instantly cleaning up the balance sheet. And that leads to step 3. You're now in a position to command a much higher premium valuation from the market.
So why does that premium even exist? Well, it's pretty straightforward. The market, investors, they just pay more for gold ounces that are pulled out of the ground in places like Canada and the USA compared to other parts of the world. It's called a jurisdictional premium, and it's all about perceived safety, right? Political stability. So by focusing squarely on North America, Equinox basically made itself a much safer, much more attractive investment.
Okay, so the balance sheet is fixed. It's de-risked. But where's the growth going to come from? Well, the answer is a brand new engine. An engine fueled by two massive new mines that are, at long last, finally coming online.
So let's take a look at this new, leaner portfolio. The real stars of the show here are the two new Canadian mines that are ramping up as we speak. You've got Greenstone in Ontario, that's the big one, the cornerstone, and Valentine over in Newfoundland. Then, backing them up, you've got some steady producers in the US and the Los Filos mine down in Mexico, which is still throwing off cash, but analysts kind of see it as a bit of a wild card.
So think about it. The construction risk is gone. So what's left? What's left is this incredible ramp up in actual gold production. The result is just this steep climb in output as those two big Canadian projects, Greenstone and Valentine, really start to hit their full stride. And that right there is exactly what investors have been waiting to see.
And here's the really crucial part. This whole turnaround, it's not just some projection on a spreadsheet. It's actually happening. It's already showing up in the numbers. I mean, look at the third quarter of last year. The company blew past earnings estimates, which is a huge sign that this turnaround is real. Revenue? Up a mind-boggling 91% year over year. As one analyst perfectly put it, the free cash flow spigots are officially wide open. Okay, now no investment story is all sunshine and rainbows, right? You have to look at the other side of the coin. A truly balanced view means you have to acknowledge the risks, the potential headwinds, and this analysis is very clear on what those are.
There's this classic saying in the mining world, and it really sets the stage for the risks we're about to talk about. It's a really powerful reminder of just how tough this business is, and it definitely sets the right kind of cautious tone for what we need to keep an eye on.
All right, so let's break down the key risks. First up is execution. Look, trying to get two giant new mines up to full speed at the same time is just incredibly complicated. Any little hiccup, delays, mechanical problems, it could cause them to miss their targets.
Second, you can't ignore the price of gold itself. Equinox is what they call a high beta stock, which is just a fancy way of saying if the price of gold drops, Equinox stock is probably going to drop even harder. And finally, there's Los Filos in Mexico. Yeah, it's not as important as it used to be, but it still has a history of issues with community relations that could, flare up again.
So, when you put it all on the scale, you weigh that de-risked balance sheet and the massive production growth against those real potential risks. Where does the analysis ultimately land? Well, it all comes right back to that central idea we started with: graduation.
And here it is, the final verdict. Put as simply as you can, the company has done it. It's completed its transformation. It's kind of like it shed its old skin as a risky developer, and now it's officially a major North American producer. And get this, it's delivering all that new gold into a market where prices are at historic highs.
So what does all this mean in real dollars and cents terms? This is the bottom line right here. At the time of this analysis, the stock was trading around 14 bucks. The analysts, they've set a target for the next 12 to 18 months somewhere in the $22 to $26 range. That big gap between the two, well, that's the re-rating they're expecting to happen as the rest of the market catches on to Equinox's brand new story.
And that leaves us with one final big question. According to this analysis, Equinox Gold has basically walked across the stage, gotten its diploma, and has a brand new, shiny report card. The whole transformation is done. But the real question, the one that matters now, is this: will the rest of the market agree with that final grade? And that is the billion-dollar debate that investors are going to be watching very, very closely.